Hi, I'm Josh Klayman, and I'm Senior Counsel and U.S. Head of Fintech and Head of Blockchain and Digital Assets at Linklaters. And I'm really excited to be here today with my friends Adam and Fran, who are going to introduce themselves in a moment. And we're here to talk about the rise of DeFi. Adam, would you like to tell everyone a little bit about you?
Of course. Thanks so much, Josh. Adam Reed's here. I'm the co-founder and CEO of Ledn. Ledn's a Canadian company, but truly focused on offering our products globally that help people save in Bitcoin and other digital assets like stablecoins.
Thanks. And Fran?
Yeah, hi, my name's Fran Strajnar. I've been in Bitcoin for quite some time, and I'm quite focused on the space between digital and financial engineering. It's a Techemy group owns and operates a range of businesses that focus on infrastructure that help this whole asset class scale.
It's terrific. So we have here with us some really knowledgeable folks. And I just want to say at the outset, nothing that we say is legal advice and nothing that we say is investment advice. Okay. So starting off, what is DeFi anyway? What does it even mean? Fran, shall we start with you?
Sure. So DeFi is a recent word. It was coined around late 2017, arguably, sort of early 18. It's an interesting word because I feel half the companies out there are hiding behind issuing securities by using the name DeFi. Oh, it's okay because it's DeFi. I think that the crux of it is essentially just a new financial renaissance, the ability to create financial instruments and financial services using blockchain technology. The most apparent use right now is the disruption in funds administration, as it cuts out a lot of middlemen, but we're seeing some pretty rapid pace innovation, and that's affecting insurance and a whole sway of capital market activities. So DeFi is almost like a broad term to say Fintech for.
Got it. And Adam, what about you? If not DeFi, then what? Is everything DeFi right now?
Obviously, totally agree with Fran's definition. I think, what I think about is Bitcoin was the first digital asset that was truly global. Obviously, an asset where Bitcoin, where Fran's sitting in New Zealand, is the same as a Canadian Bitcoin, where I'm sitting in Canada. And so, just to expand on that, the rest of our financial services today are pretty much locked by borders. So if I open up a checking account in Canada, it's very different than a checking account in New Zealand. There's many intermediaries that I have to go through that to lend money to say in New Zealand. So I think the next step on that is connecting more complicated financial instruments, and this is the ethos behind DeFi. There's many different, I guess it is what I would say a spectrum of projects within it. Some are more related to what we call CeFi, more centralized, and others are DeFi, but there's many kind of interesting attributes that I'm looking forward to diving into today.
Great. And why do you guys think that we're seeing this rise of DeFi? What is it about DeFi? What are some of the key, whether tech or business trends? What's contributing to this rise?
You want to start with that one again, Fran?
Yeah, happy to. Look, we're talking about permissionless, borderless, global financial innovation, right? So I can now be my own bank, and instead of just setting up simple or dumb smart contracts, i.e. automatic payments, go and say service a hire purchase, I can do some extremely complex rule sets. So I can say if the weather is, X degrees, then release the payment for N, Y, and Z. We talked about this for a long time in supply chain back in 2015, 16, and the promise that blockchain would be able to essentially cut out a lot of costs and offer transparency and remove systemic risk from the financial world. The reason that it's happening now is simply because the infrastructure is finally good enough. Right? There's too many billions and geniuses involved in this industry for blockchain not to figure out how to scale. And I don't just mean infrastructure like wallets, etc., but the user experience of products has become quite easy and simple to use. And infrastructure like Melon, token set, balancer, so on and so forth, those types of solutions that are touching upon middleware, Oracle, so on and so forth, bridging the real world to this world, basically allowing for any physical thing to be represented in a digital medium. That was there was quite a barrier to entry. You needed to have some robust blockchain development skills, and there weren't exactly a lot of people capable of having those skills. So the industry got very educated and the infrastructure matured vastly, and now we're seeing rapid fire financial engineering.
Now, Adam, do you have anything to add about that? I mean, do you think, for example, the recent pandemic situation has led to an increase in DeFi, or do you think we were heading this way all along?
Well, I think the other thing to add is that the concept of token economics, right? So being able to really gamify how people participate in something and incentivize them to participate in something. And really what motivates people is the thought of getting wealthy through joining something. And many projects within DeFi have allowed for that. So what we saw in the recent hype in the last month or so was several projects listing what they call their governance token, their ability or their vote to participate in the protocol, and that rising in value very quickly. So of course, just like the run-up that Bitcoin and Ethereum had in 2017, when people see prices rise, it attracts interest and people trying to learn about how they can participate as well. So this concept of not just building the projects, but allowing people to make money from them in participating is, I think, a new tweak on what you know, if you can call it ICO or IEO 2.0, being able to participate in a different way in the economics of it is interesting. Obviously, some regulatory pieces to figure out there as well, but has garnered a lot of interest just on how quickly, if you go on a popular site, CoinMarketCap, how quickly some of the popular projects have risen to the top of those lists. I think it has been exciting.
Thanks. And what do you think? Is this a global phenomenon, or are there certain key markets that are really leading the way here?
Well, that's the exciting part. It's because it's global and unstoppable. If we take a look at the security token market, for example, there was a huge amount of hype around 2017 about STOs and changing the world and being able to tokenize everything from a 100-story building to your cat or your toaster and securitize it and borrow against it and so on and so forth. Now, what's happened in that front is that it's very much regional, right? Every country has securities laws, and they needed to adapt their thinking about how to treat this asset that's a fourth superclass of assets. Essentially, it doesn't fit in neatly as a square peg in a square hole sort of thing. So we're seeing that sector rising geographically as nations kind of build out their own infrastructure, including regulatory infrastructure. Whereas if we take a look at DeFi, it's completely global and kind of unstoppable, right? So liquidity begets liquidity. Just to touch upon the question earlier, I don't think COVID's got anything to do with the current environment. I think that the reason that it's rising now is because crypto's in a bull market. And so a lot more fresh liquidity is flowing in already, and we've got some pretty institutional kind of custody solutions in place that allow for many different types of participants to start entering. And so we're seeing this huge net inflow into the crypto space. And at the same time, you can finally do something with your crypto. So instead of just buying Bitcoin, Ether, etc., and speculating on it, you can actually put it to work, and you can earn interest and lend and borrow and so on and so forth. So again, I just package that up as infrastructure is maturing to a point where all this experimentation can occur.
Thanks. And Adam, do you have anything to add on this, or any different thoughts?
No, I'd say, just maybe to add just briefly, it is global, and I think what excites people is standardization of financial services, right? So being able to provide the same level of quality that we're used to in more developed economies in emerging markets, and I think that's quite exciting. To treat everyone fair and equal is the ethos of it, and although a bit altruistic, I think it is achievable. And that's, that's really what makes it global. So
that's terrific. Now, I hear some of these statements and some of these terms, and my legal ears prick up just a little bit. So, guys, and I guess I'll start with Adam. Adam, this time, what kinds of challenges do you see to the adoption and the moving forward in large scale of DeFi? I mean, I'm talking legal challenges, other challenges. What do you really see as kind of, I don't want to call them barriers, but maybe hurdles?
Yeah, so I'd say the one that comes to mind definitely with the legal hat on is this concept of permissionless money, right? And so again, this is what Bitcoin started with. Anyone can set up their own Bitcoin address and hold it in a sovereign way. If you want to conduct financial transactions like that, DeFi in its purest form is supposed to be permissionless as well, right? And I think an interesting piece that came up recently was the freezing of a stablecoin address. So if you think about sending money on chain, again, just like Bitcoin, I can create my own stablecoin address because it uses similar technology, and I can send value in a stable way from one country to another. But then there's a authority behind that. And what's I think coming up right now is if we talk about money laundering laws and the pieces around that to prevent illicit activities, who is responsible for I guess closing the gates, and should we be allowed to close the gates, right? Because you're trying to balance this idea of inclusivity and treating everyone equal, while also accounting for unfortunate bad actors. So how do you balance those two, right? So how do I allow things to happen fast, in a frictionless way, an inclusive way, while still being able to pass judgment on, hey, we need to stop this terrorist activity. So for those that aren't familiar with the example, a USDC address was frozen. So Center Corp, that's responsible for managing the balance of all the USDC, a US dollar-based stablecoin, froze an address. So for the first time, people weren't allowed to send or receive from that address. And then that kind of started the idea of, okay, is this whole thing really going to be send and receive? So I think that's what at least we use stablecoins. We're thinking a lot about that at Ledn, is how will this develop? How will the regulatory piece interplay with this? And then that touches many other things. So as we get deeper into it, what about oracles and who's calling the shots on real world data too? So yeah.
Thanks. Yeah. And Fran, do you have any other thoughts about what some of the challenges may be?
Yeah, I call a lot of it executional risk. So I would put all the scams and such into that bucket as well. Basically, you're always going to have a sector of society that uses any technology, kind of weaponizes it for their own greedy purposes, right? And like I said at the beginning of this, I think my very first comment or thereabouts was that a lot of companies hide behind the word DeFi to essentially try and remove themselves away from needing some kind of license or compliance for the product or service that they're offering. So I guess we treat everything as pretty much everything like a security. We just don't take the risk. So the way that we design our products is everything has to be 100% liquid, instantly redeemable, and sub-custody. And we KYC, AML, etc. Anybody that calls Techemy.capital for any of our products, we've got to pump out a whole pipeline full of DeFi instruments. And we focus more on extracting yield as opposed to payments and remittance or anything like that. So you have to take a good degree of caution here, because I mean, could you just imagine the regulators right now looking at this going, what have they done now? Like, look, these crazy crypto people are now sending packets of kittens, pictures of cats that are worth 100K, and they're collateralizing that and borrowing against it, and basically creating, all kinds of swap instruments and basically the financial products that led to the 2008 financial crisis. We're seeing a lot of value being rehypothecated, recycled, reused, and I think a lot of it is terrifying. So I describe it as executional risk. And that also means solution design risk, right? I've seen so many DeFi products where you just look at it and go, well, this has got some pretty immense game theory and network effects that nobody can predict right now. And a lot of people are on Twitter talking about, I test in production, which is absolutely insane. Like there's network risk, technology risk, there's executional risk, there's legal risk, there's operational risk, and a lot of these products will fall apart. But I think the single biggest problem is that I call it the attention economy. It's like when we're in a bull market, this is truly global. So if you get the most attention, you get the most liquidity. Now you can get attention for valid reasons, like producing a product that actually solves a problem, right? And we're seeing a number of interesting use cases from Uniswap and Balancer and others. Although the problem they solve might only be temporary, and they might be irrelevant, very shortly with this rapid innovation going on. But yeah, I would be cautious. Do your own due diligence and don't trust, verify, essentially.
Thanks. Yeah, so, one of the things you said, Fran, was about things potentially being terrifying. Of course, there's a positive side to that too.
Yeah,
hopefully
sure.
Not everything is terrifying. But what do you think this means, this rise of DeFi? What does it mean for institutions? Are you seeing a lot of institutional interest in this? Do we anticipate that there will be, joint ventures or different types of collaborations, or do we think that are these destined to remain separate? What do you think?
I think there's a lot of interest from institutions right now. I'll try and give some practical analogies and examples. Well, first and foremost, just as a super simple idea, pretty much all of fintech, any payments, remittance, etc. application benefits hugely from stablecoins or integrating wallets and stablecoins. It just makes all of their costs and services smoother, faster, and more transparent if designed and executed correctly. So we're seeing a lot of fintech companies slapping the DeFi label on their brands or integrating with DeFi solutions to enhance their products and services. I think that's the right way to go about it, is if you treat this like a financial product or service, and then you simply view DeFi as a tool and technology, you can achieve some pretty remarkable things for your company and your clients. And you don't have to design things in a hugely speculative way that could end up with a lot of systemic risk. What type of institutional interest is there? Well, let's put it this way. Let's take Japan as an example. 63% of all the wealth is owned by 60-plus-year-olds. There's not much designed for 30, 40, 50-year-olds in terms of financial products and services. So when Bitcoin came along in 2012, 13, they started to gamble furiously, right? And then we had Mt. Gox, which was bad execution, bad technology, all the rest. Then the regulators stepped in quite early, and they put forth a framework so that businesses knew what the rules were and they could get on with business. Now, fast forward a few years to today, and you've got an environment where there's a huge demand, right? There's negative interest rates. Pokemon Go credits yield better than Japanese government bonds, right? So just for perspective. And so there's literally trillions of dollars in yen just sitting in corporate treasury through corporate Japan. And these businesses are looking for financial products that yield better than zero. And so one of the areas that we're finding interest in is creating what I have come to term structured DeFi products, which is a play on words on structured income products, whereas essentially we strip out the risk of the volatility of the underlining, so the up and down of Bitcoin, Ether, etc., and we just extract the returns of the yield of activities such as arbitrage, market making, borrowing, lending, so on and so forth. And we package that up as a financial instrument that can spit out between 10 and 20% interest rates per year. And you can insure the principal as well through insurance products like Nexus Mutual. So all of a sudden we have totally scalable, 100% liquid, instantly redeemable, principal protected, and self-custodied structured income products that are far more appealing in their risk profile and return than, say, conventional structured income products available in corporate Japan today. And so we're just onboarding the first of the institutions out of our network at the moment, and we expect to receive quite a significant AUM into the DeFi, structured DeFi products that we're rolling out. So it's just a local example of what we're up to, but I'm seeing all kinds of interest from institutions, and those that have dipped their toes in the blockchain waters over the last few years are acting faster, whereas everybody else that's FOMOing in now, and institutions also FOMO, so they still have a huge educational barrier, and it might take a couple of years to get across the line.
Thanks, Fran. And Adam, just, in your view, I mean, is DeFi the future, or is it still CeFi? Are we going to see both? What do institutions really want, and what do people really want?
Yeah, I'd say just like many other types of technology, what I think DeFi is good at is really simplifying things administratively, right? So activities that are highly repetitive and need to scale, like trading assets. So you're seeing the emergence of distributed exchanges. That's exciting. What it's not yet good at is real world one-off problems, right? So an example I'd love to use is, let's picture DeFi for the insurance industry. So yes, you can use stable coins to simplify payouts, but it's challenging to be a judge in between on a one-off accident, right? So whose fault was it? That's going to be a challenging problem to solve. So I think, as institutions look at this, they need to be learn from the hype of 2017 and say, okay, what was blockchain good and not good at? And now use the same layer of thinking is, you don't need to DeFi everything. Not everything is a problem to be solved by this technology. It's exciting, but it doesn't apply to everything. And some things work well with human intervention. And one-off problems that don't need to be repeated, that's what human minds are good at solving. So I think that's going to be the lens that will make it scalable.
Thanks, Adam. That's terrific. Okay, so it looks like we have just a few minutes left. I'd like to give each of you just a couple of minutes to talk about what you think is next. What's coming? What should we look forward to? Adam?
You go first then?
Yeah, sure. I think, I think we're going to see more things that are scalable, like sports betting. I think that's going to be a huge emergence in DeFi. That there's already some interesting things happening there. I'd like to see more move out of just trading the same digital assets. So I think there's already, in my mind, a crazy amount of exchanges and ways to buy and sell Bitcoin and Ethereum. And I think that'll be consolidating as well than many other assets. So I don't think that's a problem that needs to be solved. So I think it's kind of reflecting on what I said before, finding more repeatable problems that are exciting for DeFi without DeFiing everything. So it's kind of that interesting layer. But the one thing that I'm most excited about coming from a company that does lending is the DeFi holy grail to crack is the credit score problem. So credit scores, as you move from so let's say, again, New Zealand to Canada, because we're both on the call here, don't transfer, right? And so how do you make that so that I can take that through and have a global credit score? Because although Ledn provides loans, our loans are asset-backed. It's quite simple for me to underwrite a loan from Bitcoin. It's much more complicated for me to underwrite a loan on a company or a person based on historical credit. So I think you're already seeing that. There's an entity in Canada called Clearbank that integrates with Shopify so that they can look at reoccurring payments to say, okay, yes, this person's producing pottery and they get paid every week and it's exciting. So based on that payment, I can advance them a loan. So more innovative ways for people to, for companies to advance financing in more like traditional credit types. That's what we're really excited about at Ledn. I think we're thinking about how we can morph into solving the more traditional problems with DeFi.
Thanks, Adam. And Fran?
Well, from my perspective, the single largest opportunity is derivatives, just because by size in the real world, that's the biggest bubble in history. I'm not saying it's a good thing or a bad thing. I'm just saying it's literally the biggest, sized opportunity. So we're seeing a bit of a renaissance. I keep calling it the greatest experimentation in monetary policy the world has ever seen. And essentially, we can design and rapidly deploy heavily liquid instruments that haven't existed before. We can customize financial products and services pretty radically and pretty quickly. I view the world as kind of a CeFi versus DeFi roadmap, where you have those that use this technology to replicate existing products, but removing hopefully systemic risk, and hopefully not introducing new risk and operational risk and software risk and all the rest. But they're essentially stripping out the costs of replicating real-world systems, which might be, post-trade settlement of cash equities. It might be borrowing, lending, payments, remittance. Those are the, capital markets and financial services are the biggest sectors in the world. Whereas on the other hand, you have what I call unstoppable financial automata. These are DAOs, or decentralized autonomous organizations, that nobody owns, that nobody essentially is the single benefactor or equity holder concentration and all the rest. So I believe we're going to have a DAO for financial product insurance. We're going to have a DAO for perhaps forecasting, like Augur, prediction market DAO. So I think we're going to have kind of like verticals of decentralized autonomous organizations. And what interests me is how this technology rubs up against others for machine learning and other practices. And that's where really interesting things happen. Right? You end up with, say, driverless cars if they're everywhere. Well, you could have your driverless car earn you money as you're out going for a few drinks. It rents itself out and pays you while you're busy having fun. So we like to kind of focus on the area between that revolves around infrastructuring good financial product design, so that all of these applications, the killer applications we can't even imagine today, can be powered tomorrow.
Thanks, Fran. So we need to wrap up now, but if someone wants to find you or learn more about you, where can they find you? Adam, can you tell us social media or wherever the best way to reach you? And then Fran? Adam?
Cool. Yeah, I'm on Twitter at just my full name, Adam Reeds, all one word, and LinkedIn works as well.
Yeah, I try and stay away from social media, so just LinkedIn, full name, on Twitter at Techemist, but not very active.
All right. Thanks very much, guys. You guys were fantastic, and I know everyone in the audience really appreciates it. Have a great day.
Thanks so much, Josh.
Thanks again to the DeFi panel for an insightful discussion highlighting the rapid innovation happening in today's DeFi space. As we know, billions of dollars are pouring into projects, and the disruptive potential is pretty much igniting the imaginations of thousands of cutting-edge technologists again, just like the introduction of blockchain did 8 to 10 years ago. Decentralized finance is evolving at such a breakneck pace. The obvious question is, where's it going? How will it get there? Before I answer that, though, can you believe that Ethereum's mainnet turned 5 this July? An incredible amount of innovation has happened in 5 years since Ethereum promised us permissionless, transparent, and automated financial transactions. Sure, there have been technical hurdles, but with the upcoming upgrades from proof of work to proof of stake and other scalability solutions, Ethereum and similar blockchains are getting ready to tackle Visa-like volumes of transactions in the coming years. So as a CPA working on a decentralized tokenization platform that's evolved with regulators over the past 3 to 4 years, I've been asked to share my views on where we're headed with DeFi 5 years from now and how we'll get there. Now, as hard as it is to predict, we've seen this disruptive playbook many times. Business became e-business as we brought the internet in for a few years in the late 1990s before it just became business again. Social media platforms disrupted our news, and now we get our news from social media. Cryptocurrencies even started off as disruptors of value transfer, obviously, and now they're much more mainstream. And you and I can invest with with mainstream Bitcoin and Ethereum funds. So in my view, DeFi, and that's the application of blockchain to finance in the broadest possible sense, actually, will transform every aspect of finance. Why do I think this? Well, DeFi has the potential to transform regular banking deposits and borrowing, such as lines of credit or corporate paper, payment processing of all kinds, and investing in plain vanilla equities to even highly complex derivatives. DeFi has such a huge potential exactly because finance is such a big space. Trillions of value in entire economies need financial services, and DeFi is going to be there. So let's take a look at it. Today, without anyone's permission, you and I can deposit a stable crypto asset such as DAI into an automated series of smart contracts. They're not called a bank, but actually act as one and immediately begin earning DAI interest block by block. You can even withdraw your funds at any time back to DAI in the same app on your phone. On the other side, someone's borrowing that asset and speculating on the rise of a cryptocurrency such as Ether with their newfound leverage. So download that Argent wallet, deposit your DAI USD stablecoin into Compound. You'll quickly realize that block by block interest is the gateway drug for DeFi. So if you've seen, as we've seen, you can use advanced services such as Ledn to borrow and deposit your Bitcoin to earn yields of up to 10%. Yield farming is a brand new term in our lexicon. Then there's Curve, DYDX, Uniswap, Kyber, all of these new projects coming on stream and really changing the way that we think about finance and the way that financial services can be delivered. So DeFi today is growing so rapidly that I expect we'll have 50 times the number of projects in the coming years. The technology is still difficult to get right. In fact, let's be clear about one thing. Regulators have views on whether some of these activities are actually banking services. Without banking licenses, possibly, and unregulated derivatives trading. As with ICOs, though, only time will tell. There's very likely going to be a path for everyone to participate in these DeFi products and do it on the basis that regulators will be a participant in that ecosystem. So we'll be standardized and obviously comfortable with the regulators. That'll take some years, obviously, as we've seen the maturity of the blockchain platforms also kind of work their way through the regulatory regimes. So where will we be 5 years from now in a nutshell? The major stock market exchanges are building next-gen trading platforms as they see their mainstream profits diverted to DeFi platforms. They'll be jumping in soon with DeFi products of their own. Will they be as decentralized and permissionless? Not likely, not exactly fully decentralized, not with the requirements for regulatory kind of oversight in the near term. Likely not. Could be surprised on that, but the innovations of DeFi will certainly have become mainstream for us. So my prediction right now is that 80% of all of our financial services and markets will be run on blockchain technology within the next 5 years. We were already tracking there, but now that we're even more digital with COVID-19, I'm really convinced it will happen within the next 5 years. And as DeFi in its current state kind of matures, I really think that it'll drive at least 25% of finance activity. What that means is that we'll have trillions of dollars of on-chain value. And that's a huge transformation in our financial systems. Look forward to discussing a lot more of this with you all. Thanks.